If you want to maximize the compounding effect in your portfolio and really kickstart the dividend snowball, then yes, you do need to be reinvesting dividends, but you also need to be investing into companies that are committed to increasing the amount they pay out in dividends every single year. So in this video, we're going to be looking at 5 recent dividend increases from popular companies that you need to know about. So let's go ahead and start with a company that had a really nice dividend increase within the last few weeks, and that is United Health Group. They raised their dividend by 13.9% to make it a $1.88 payout. That 13.9% is a really nice dividend increase. When was the last time you got a 13.9% dividend increase from your job? That right there is the power of dividend growth investing. If we jump over to Seeking Alpha, which by the way, you can get a 14-day free trial to at my link in the description, you can see this company is currently trading at $465 per share, and year to date, they've had a little bit of a pullback. They're actually down about 10%. And with this new dividend increase, we can see their dividend yield pretty low, now sitting at 1.64%. But if we jump over to that dividend tab on Seeking Alpha and look at dividend growth, you can see they have a very strong track record of increasing their dividend payouts by large amounts. They have a 3-year dividend CAGR of 15%, 5-year 16.74%, and a 10-year 22.23%. If we jump over to the dividend history tab, we can see they've now been increasing the amount they pay in dividends for 13 consecutive years. If we look at that chart, we can see 10 years ago they were paying out around 21 cents per share every single quarter, and that is now $1.88 per share every single quarter. So that is a really good decade of dividend growth. If we jump over to my stock valuation spreadsheet, which you can download on my Patreon page at the link in the description, we'll go ahead and plug in UNH and hit enter, and again, all of this data will automatically load in. Now, typically we look at a few different valuation models, but for this video, we're just going to be focusing on the dividend discount model, but I also want to pay out the payout ratio for UNH, only sitting at 29.8%. So despite a really good track record of increasing their dividend payouts by a pretty large amount, you can see their dividend is still very, very safe. Even if we look at the cash flow dividend payout ratio, it's only sitting at 21.3. So yes, despite the really high dividend growth rates, that payout ratio has been sitting at around 20 to 30% for quite some time, which is a sign of a very healthy business. You can see analysts currently have a target price of $595 per share, institutional ownership very high at almost 90%, and a beta of just 0.68, so you'll see very low levels of volatility with this company. If we jump over to our dividend discount model, this is a way to value a company based on how much they pay out in dividends and how much that dividend is increasing over time. So I plugged in the historical dividend payouts every single quarter over the last few years so we can see how much they pay out each year. And again, this allows us to see our year-over-year dividend growth rates. And like I mentioned earlier, it's very strong. We have 15.7, 16%, 14%, and 13.9%. That's an average growth rate of nearly 15%. So moving forward, I'm projecting a dividend growth rate of 7%, discount rate of 8.5%, and that gives us a dividend discount model price per share of $536.43. As a dividend growth investor, anytime I invest into a company with a low starting dividend yield, I want to make sure they have high dividend growth rates and that the dividend is sustainable, because to me, that's what makes a company attractive despite its low starting dividend yield, and that's clearly the case with United Health Group. Now, the next dividend increase was actually a pretty disappointing one. We can see Target raised their dividend by just 1.9%, giving them a $1.10 payout. Now, anytime you see a low dividend growth rate, one of the things you need to keep in mind is what is the current inflation rate, because if the dividend growth rate is below the rate of inflation, the company is technically paying out less in dividends than they did the year prior. So to me, this dividend growth rate from Target is definitely a huge disappointment, but let's go ahead and dive into it just a little bit more. We can see the company is currently trading at $137.84 per share over the past year, down about 3.41%, and year to date down around 9%. Now, the company does have a solid starting dividend yield sitting at around 3.24%, and if we dig into the dividend history a little bit, we can see this is a dividend king. They've been increasing dividend payouts for 54 consecutive years, so definitely a very strong track record of increasing dividends. And if you look at the dividend growth rates, historically it has been pretty good. The 3-year sitting really high at 17.84%, 5-year at 11.7%, and the 10-year sitting at 11.61%. If we jump over to my stock valuation spreadsheet, you'll see payout ratio sitting at around 70.1%. So let's dig into that just a little bit more. That's typically a little bit higher than I like to see it, but if we click on dividend safe, one of the things that I do want to point out is that cash flow payout ratio is only sitting at 26.1%. So yes, the dividend payout ratio with the earnings is a little bit high at 73%, but overall this dividend is still very sustainable with the cash flow payout ratio only sitting at 26.11%. But if we jump over to our dividend discount model, I'll go ahead and zoom in just a little bit, and you can see I plugged in that new dividend payout. And overall, they had a pretty good history over the past few years of increasing dividends. They had a 3% increase, so nothing too crazy, but they also had a 32.3% increase and a 20% increase. So that was phenomenal dividend growth over the past couple of years. But again, this most recent one pretty low, sitting at around 1.9, but that's still an average growth rate of around 14.3%. Moving forward, I do think they have a lot of room to continue to grow their dividend payout, so I'm projecting a dividend growth rate of around 6%, discount rate of 8.5%, and that gives us a dividend discount model price per share of $186.56. Now, the company's been in the midst of a lot of political controversy over the past few months, which has definitely hurt its share price, but if they can get back to focusing on profits over politics, I think this could be a good dividend grower over time. The third dividend increase we're going to be looking at is a pretty solid one from a company that I personally own, and that is Caterpillar. They boosted their quarterly dividend by 8%, giving them a $1.30 payout. We jump back over to Seeking Alpha. You can see their starting dividend yield sitting at around 2.14%, and over the past year, they have seen a really nice run up in their share price. They're up around 20.23%. Let's go ahead and look at those dividend growth rates, and you can see over the past 3 years, dividend growth of around 5.22%, so that's decent. Personally, I'd like to see it a little bit higher for a starting dividend yield of around 2%, but the 5-year and the 10-year dividend growth rate's pretty good at around 9% and 8.72%. So overall, I'm pretty happy with an 8% dividend growth rate. Let's go ahead and jump into my spreadsheet. We'll come up here and plug in CAT and hit enter, and you can see this data will load in. One of the things I will point out, payout ratio is sitting at around 34.6%. So for a company that's continuing to generate more free cash flow year over year with a low payout ratio, I definitely think this dividend growth rate is very sustainable, which is really good news. So let's go ahead and jump over to our dividend discount model. I'll zoom in and you can see our current updated dividend payout right here. So they have a pretty good history of increasing dividends. They had a dividend increase of around 20% just a few years ago. Recently, it's been more around 7.7, 8.11, and the most recent sitting at around 8.33. So that's an average growth rate of right at 11%. Moving forward, I'm projecting a dividend growth rate of around 6.75%, discount rate of 9%, and that actually gives them a dividend discount model price per share of $246, which is right at their current trading price. The fourth dividend increase that we're looking at is kind of a unique one because we're looking at the real estate investment trust, Realty Income. This is a company that pays out dividends every single month, and they actually increase the amount they pay in dividends every single quarter. You can see their most recent dividend increase is now a payout of 0.255 per share. And remember, that's every single month. And when you look at it year over year, that's actually around a 3% dividend increase. So let's go ahead and dig into this just a little bit more. You can see the current trading price sitting at around $61.23. And over the past year, they're down 5 to 6%. Now, like I mentioned, they have a nice starting dividend yield sitting right at 5%. Let's go ahead and dig into those dividend growth rates. If we scroll down, you'll see a decent 3-year dividend growth rate of around 4%, 5-year at 3.75, and a 10-year at 4.72. Let's go ahead and dig into that dividend history. We can see this is one of the few real estate investment trusts that is also a dividend aristocrat. They've been increasing the amount they pay in dividends for 26 consecutive years, and like I mentioned, again, they pay out every single month. So you can see slow but steadily growing dividend payouts every single month. Let's go ahead and jump into my stock valuation spreadsheet. We'll come up here and plug in O and hit enter, and this data will load in. Now, the huge red flag that we're looking at right here is the payout ratio. It's showing 208.9%, but just looking at the payout ratio for a real estate investment trust is really not the best way to judge the safety of their dividend payouts. Let's go ahead and jump back over to Seeking Alpha. Really, whenever you're looking at a real estate investment trust, there's a different metric that you want to look at. So if you scroll down here, you can see the FFO payout ratio. That's the metric that we want to be looking at to judge the safety of a real estate investment trust payouts. And you see it's sitting at around 73.9%. So it is a little bit higher than I would personally like to see it, but it's not necessarily a red flag. I think Realty Income has very slow and reliably growing dividends that are safe. So back on our spreadsheet, you can see analysts going to have a target price of around $70 per share, institutional ownership pretty high at around 83%, and a beta of just 0.81, so you'll see low levels of volatility with this company. Looking at our dividend discount model, we'll go ahead and zoom in a little bit, and again, you'll see the dividend growth rates year over year. We have around 3%, around 1%, pretty good increase here at 5%, and then our most recent dividend increase year over year sitting at around 3.23%. So that's an average growth rate of right at 3.1%. Moving forward, I'm projecting a dividend growth rate of about 3.5, discount rate of 8%, and that gives us a dividend discount model price per share of $70.52. This is definitely a popular stock for a lot of dividend investors because they love the idea of getting dividends every single month, and they love the idea of getting growing dividends every single quarter that are relatively safe. The last dividend increase we're going to be looking at is from a company that's a fairly large position in my personal portfolio, and that is Lowe's. They increased their dividend by about 5% to $1.10 per dividend payout. If we jump over to Seeking Alpha, we can see pretty good returns year to date, up around 10%, and over the past decade, the company has had a phenomenal run up in share price. They're up around 453%. Now, like a few of the companies we looked at today, they have a fairly low starting dividend yield, sitting around 2%, so we do want to see a good history of dividend growth increases. Overall, for a 2% yielding company, I typically like to see a little bit of a higher dividend growth rate than just 5%. Let's go ahead and dig into the historical dividend growth rates just a little bit more to see what we're looking at. If we look at that 3-year dividend growth rate, we can see it's extremely high at around 24%, 5-year again very high at 20%, and the 10-year almost sitting at 21%. So even though this most recent dividend increase not quite as high as I'd like to see it, the 3, 5, and 10-year dividend compounded annual growth rates are all extremely high. This is also a company that's been increasing dividends for 59 consecutive years, making it one of the top dividend kings. We'll plug in Lowe's and hit enter, and again this data will load in. You can see the payout ratio sitting at around 30.6%. That's pretty impressively low payout ratio for a company that has really nice dividend growth rates over the last 10 years and has also been increasing dividends for 59 consecutive years. You can see analysts currently have a target price of $228 per share, institutional ownership getting pretty close to 80%, and the beta is a little above 1, so you will see a little more volatility with normal with this company. Jumping into our dividend discount model, we can see our year-over-year dividend growth rates. We have 9%, so that's pretty solid, and then we have two major dividend increases over the last couple of years, 33.3% and then 31.25%. Those are massive dividend increases, so the most recent sitting at around 5%, maybe a little bit of a disappointment, but still overall over the past 2 years, really solid dividend growth with that average growth rate close to 20%. Moving forward, I'm projecting a dividend growth rate of 7%, discount rate of 9%, and that gives us a dividend discount model price per share $235.40. So while the company does have a fairly low starting dividend yield, I do think they have the ability to continue to have those high dividend growth rates while maintaining a low payout ratio due to the company continuing to generate large amounts of free cash flow. One thing you do need to keep an eye on is this company does have a relatively large amount of debt, which is a little bit of a red flag for me. So there you go. Those are 5 companies that recently had dividend increases that you need to know about. If you'd like to be able to download this spreadsheet, then you can head over to my Patreon page at the link in the description. You can also get a 14-day free trial to Seeking Alpha at my link in the description. So with that being said, thank you guys so much for watching the video, and please don't forget to like and subscribe to the channel.